Yes, sir.
So this is, what is today? Tuesday? It's Tuesday, August 2nd, right? Second trading day of the new month. This is a mid-market commentary. We're going to take a look at NDX here, and we're going to start with a longer-term time frame. So we did the same thing yesterday, but it was a different picture yesterday. So if we take a look at the 120 daily chart in the lower right-hand corner of your screen, we actually are still, well, let me take that back. So yesterday, you can see that we were clearly double stacked to the upside. And we were saying that although we know that there will be a reverse cycle, a declining cycle at some point, there was nothing in the long-term chart that was telling us that it was ready to start. So today, we actually started double stacked. We printed daily support again. And then we printed a sell signal. So, Michael, would you consider that to be a valid sell signal on the 120 daily?
Not yet.
And why
Not
is
yet.
that?
When we need to wait till midnight tonight, which would be a daily chart, starts over the next day, that this does not print, this support level doesn't print again. It prints at midnight. I don't know if it prints at midnight, but the next day when I wake up, it's there.
So what level is that at? What
That's at
price level?
40. That's at 46.72.
And we're currently trading at?
47.09.
Okay. So my point there is that it may not be yet a valid signal to say we're going to reverse and we're going to reverse the trend. We may still be in a rising trend, but if the price were to move back down to support, that's enough for us to have a profit, right?
Yes.
On a
Oh,
declining
yes.
bias trade. So the point I want
Yes.
to make here as we go through these charts, and I really want to emphasize for those who are listening, people in the live trading room, is you go through a series of charts, you go through a series of time frames, and what you're trying to do is to determine what the market wants to tell you. And here, my interpretation of the 120 daily is that the market is telling us there's a little bit of weakness that has not existed for the last several days. We don't know yet if that means that we're going to start a reverse, a counter, a new declining cycle here. But we also know that if on a shorter time frame we saw a signal to go short, to buy a put, to open a call credit spread, anything that would benefit from a declining bias, there's actually enough room for the index to move all the way down to daily support, and we would still have a nice profit on that, even if daily support prints again tomorrow and we are still technically in a rising bias trend. How about the 60-minute, 180-minute?
60-minute, 180-minute. It looks like we are. That signal is valid. We're just waiting. Well, it's past my time. Oh, yeah, it is. So yeah. So support didn't print. It should have printed at noon, and it didn't print. So this signal is valid to the downside for sure.
Okay, so that's the first indication on a long-term time period that we may be breaking below the rising trend. We've been in that rising trend for quite some time. We saw the red bar print with a red dot on it. That's the sell signal. You want to wait for that bar to close, and you want to confirm that the next bar opens red. Now, Michael, do you wait for that second bar to close red?
Well, no, I always wait to the third bar to the right of the last support because these are set up in three, so it's a 60-minute chart. So you need to wait till 180 or 3 hours goes by to make sure it doesn't print again on the
All right,
support level.
perfect, perfect. So we've already confirmed the support is not printing anymore, but now what we have is a pattern of 60-minute resistance printing at around the 47.51 range. All right, what about 3090? Working our way back to shorter periods.
And let me go back just to be clear on this 60-minute chart. We need to wait till this bar closes right here that we're on now, this 12 o'clock bar. It won't close until 1 o'clock. Then we'll see if it prints again. We're not 100% sure of this yet.
All right, good clarification. So that's what you were talking about, waiting until the third bar to the right, or third.
Yes.
Yeah, third bar to the right.
The third bar of the last support that we broke through. Yes.
Okay. All right.
Okay.
So the
and
3090.
3090, great signal. And it looks like to me that it's not going to print. It's the fourth, what we're in the fifth bar to the right now.
Hmm.
So that 90-minute support level is not going to print. Now it can. I'm not saying it can come back, and when the market moves back up, it'll happen. But right
But as
now,
of right now, it's quit
it
printing.
hadn't quit printing.
It definitely was printing consistently prior to this and stepping higher. And now it's quit printing. And instead, we've
Yes,
replaced it with 30-minute resistance, which is printing
that's
above.
right. That's right.
And what's interesting is on the current bar, we have 30-minute resistance printing, but it's stair-stepped lower.
Yes, that's right. And that's something, Mark, just I forgot to mention, but the 60 is the same way. I mean, it's got resistance. We hadn't had that in a while. I mean, a long time. So
Yeah, I
that's
mentioned that, but it hasn't
okay.
stair-stepped lower.
No,
But
it has not.
what people should start to see here is that there is a evolving pattern starting with the shorter time frames. We started at the longer time frames to see what the picture is, but at the shorter time frames, you can see how the crumbling and the weakening is starting to become more evident. Um,
Yes,
and so then let's get all the way down to the 3-minute, 9-minute chart, which is what we use for the majority of all of our trade signals to get in. We've been in a pretty consistent red waterfall today.
yeah, we had right just out, actually right out of the gate this morning at 9:36. The cell
Mhm.
signal came on, and then it never looked back.
So, what I find interesting about this, you're so good about reminding people in the live trading room that the trend won't last forever. And even when you're in, or let me say that differently, the cycle won't last forever. The,
That's true.
Even when we are in a rising trend, which I think we still are, if I just use the 120 daily as my evidence, we're still in a rising trend. We haven't broken below or out of that trend yet. But the intermediate terms are starting to indicate that that may be leaning that way. And the short term cycle, the 3-9, is certainly showing us a lot of weakness today. But we did have two buy signals print. Why? I know you ignored the buy signals, Michael, but why?
Because there's a 9-minute resistance right here that's continuing to print.
Hmm.
So you wouldn't want to
So
go long when you got that wall of resistance right above you there.
So the first buy signal that printed today, now we wouldn't have known that that next resistance was printing yet, but
No,
this is where Michael was saying you want to wait until you get 4 bars to the right of the previous level of resistance. So the previous level of resistance before that buy signal was right there.
hmm
And what we want to do when that buy signal comes on is we want to wait and see if the next level of resistance is going to print. And if it does, then generally that's not going to be a buy signal that we want to take.
that's right. A lot of risk in that because you got
Yes.
that hidden wall of resistance there.
Yes. And then, of course, we started printing support, and then we saw a sell signal, and then we saw another buy signal. So it's getting a little choppy and it's kind of flattened out. But that's indicative of a pattern, a short-term pattern that is stalling in a trend. And that's what we've seen on NDX. So let's take a quick look at SPX. We won't go into it quite as much detail.
Okay,
And those little boxes that Michael is closing out of, those are just indications that AbleTrend provides us that somewhere, whether it's a chart we're actually looking at or not, but in a chart that we have saved and open, even if it's behind the main screen here, it's indicating that there's some alert that is taking place. It might be printing a support level, might be printing a resistance level, or it might be printing a sell signal or a buy signal. Well, as I said yesterday, SPX is a different story. Um, we were technically double stacked to the upside yesterday, but it's not that clean blue bar stepping up consistently like we saw. It's more of a flattening out. You're going to see that very clearly again when we look at the bar charts. But the longer term time frames and the two intermediate time frames, well, let me say this: 60 180 and the 120 daily both look pretty consistent to me, where we've broken below support on the 6180, and on the 120 daily, we're trading actually right at support. We would need to wait until tomorrow to see whether or not daily support is going to print again on SPX. But again, we don't trade off of those signals, but it's good to have them in thought and understand what they are telling you. The 30-90 minute, it looks to me like we're now double stacked to the downside.
Yes.
And that's an indication, again, as an intermediate time period, that the pattern may be weakening. And then, of course, you can see, just like NDX on the 3.9, it's been a red waterfall today, and we've kind of flattened out in a pretty tight range right now. Although I do see maybe buried under the current bar, it looks like 3-minute resistance quit printing.
It looks like it's there, Mark, to me. It's there. Yeah, you blow it up, you can see it better.
Okay.
So yeah, it's
Okay.
there.
All right, good. And then how about just a quick view of RUT?
Let's see here. Okay. Let it refresh really quick.
All right.
Okay.
Wow. So RUT was consistently stepping higher on the 120 daily. Today we got a sell signal. Again, as Michael emphasized earlier, we need to really wait until tomorrow to see whether or not support's going to print again. That'd be the daily support. We're trading right at the range of daily support, so it'll be interesting to see whether or not that prints tomorrow. But the 6180 sell signal, this looks very much like NDX, and then we've continued to move lower off of that. And then the 3090, we're now double stacked to the downside and moving lower. So there's, and then the 3.9 minute, like the other two indexes, has been consistently moving lower. So my takeaway from all that is the longer term time frames are starting to show some weakening, but have not confirmed that we've shifted from a rising trend to a declining trend. The short-term time frames have presented some opportunities today. Not all the opportunities were ones that we would want to take. You've got to be wise about how you deploy your capital. You've got to be wise about how many positions you want to keep in play. Don't ever be afraid of taking a pass on a good setup for a position if you're not comfortable putting the capital in, or you're not comfortable with the number of positions you have. Those opportunities will reveal themselves again over and over and over again. So never be hesitant to take a pass on a position. All right, can we take a look at bar charts here?
Sir, you want control?
Yes, sir.
All right, there you go.
All right, so let's start with NDX. Now, those of you who have been following along for the last several days, last couple of weeks, know that we've been tracking this line of resistance on NDX in the 1-year daily bar chart. It's identified in red right here. This is a channel that we've been identifying. And what we've been looking for is where the market is going to define a top, where the market wants to naturally define a level of resistance. And as of right now, we still need a few more days of trading to actually confirm this and validate it. But as of right now, yesterday's high at 47.6724 appears that it could be the natural market top that was formed. And what we've done is we've captured that high with our level of resistance, so that if in fact it does validate at that level, then we kind of know what the parameters are of support and resistance from our lows to multiple points of highs. And what I find interesting is the cycle that sits within that rising channel. This particular cycle, we may, without confirmation yet, we may be breaking below support of that rising cycle. So in this case, what I'll do is I'll give it a couple of days to confirm, but I also may get into a shorter time period. Let's look at a 30-minute time period. And that's going to give me a bit more granularity in terms of the number of price points that are defining my highs, my resistance, and the number of price points that are defining support. So right here, we had this series of, looks like 3 or 4 bars that were defining resistance. We had a whole series of price bars here and again here that were defining rising resistance. So I'm reasonably comfortable when I look at that detail of the placement of our rising line of resistance. When we moved higher, we stalled out at this sideways, that's the red channel, sideways line of resistance. We stalled out there, and that formed a wedge pattern between our rising support and sideways resistance. So we know that we're going to break out of that wedge right here. We just don't know whether we're going to break to the upside or break to the downside. Now, it's possible that we are breaking to the downside, and the reason I sound a little hesitant about that is because of this. If I take that channel, hang on just a second here. If I take that channel and I move it, first of all, I'm going to take off the extension and then I'm going to move it. What I can see here is that this may be nothing more than a widening of the channel, or just a slight shift in the angle. So before I saw that it might be breaking below that support, but then I also saw, having zoomed into the 30-minute detail, that we got down to a certain level, and remember, it wasn't sitting at my line of support at that time, but we got down to a certain level, and for 5 bars, we seem to have stalled at about that level. Now, folks, when you see that happen, when you see something like this happen, you've got 2 bars, or you see something like this happen where you've got 4 bars rising, that's a natural occurrence in the market, and you need to pay attention to that because the market is defining for you that there is a top or bottom there. As of right now, it looks to me like on NDX, the market may be defining a bottom for us here, not saying it won't break below that, but when you back up and you see now with just a slight adjustment to that cycle, we can see that we're in fact trading at support of that rising cycle. And now if I take that and I extend it out, then I can see that I have this wedge pattern and I'm still trading inside that wedge. It won't be until we break below that support or above that resistance that we'll be out of that wedge and we will have defined what the market's decided to do. The market's either going to decide to break out of this wedge by moving higher, and then we'll know that we're still in an overall rising cycle, or the market's going to define a breakout by moving below support. And right now we have no other support below us. Some will be defined if we in fact started moving significantly lower, but the next level of support that we would see if we broke below is around 42.61. That's quite a ways below where we're currently trading. So that's what I see on NDX. But what I find interesting is if I just back up to the 1-year daily again, you can track this pattern, you can continue to track where index is going, and eventually you're going to find the high. We're not trying to force any definition here. We're not trying to will the market to do something. We want what the market wants. We want what the market wants, and if we stay aligned with what the market wants, we're going to end up being very profitable. Let's take a look at SPX. Now, shouldn't come as any surprise if you've been following along, but for the last 9 days or so, we've been trailing right along this line of resistance. We've not been able to break above it. And today, we have now fallen below the lows of all of those last, I think it's actually 14, 7, 10, 14 days. So we've dropped below the low of the last 14 days. That all by itself is an indication of weakness. Yesterday, we traded to a high of 2178.29. The previous day's high was 2177.09. So yesterday, we had a high that was higher than the previous day, and we closed in the bottom 50% of the day's range. So yesterday, we had a bearish divergent bar. So the 2 days combined, the bearish divergent as well as now the movement lower to a lower low than the last 14 days, is an indication that we might be starting to see some weakening. If I put on the other studies, you can see here that we still have 3 breakout signals to the downside. If you've learned how to read those signals, you know that that's a pretty significant pattern when you're comparing the breakout on MACD to the breakout on stochastics and a breakout on the moving average. Combine that with the last, what was that, 4, 8, 10 days of declining momentum on the AO. So flattening in price, declining momentum on the AO, breakout signals to the downside 5 days ago, and stall at that level of resistance. Those are all indications that we're starting to see some weakness. So where could we go after this? Well, the lower Bollinger Bands are a natural level of support, but the Bollinger Bands will flare on movement. So it could find support there and bounce back higher, or it could push the Bollinger Bands lower before it bounces higher. But what's almost guaranteed to happen here, folks, almost guaranteed, is when we do start to see more significant movement lower, you're going to see that movement occur lower, and then you're going to see movement higher. And that movement back higher will most likely remain below the high of the bar where that movement lower starts. And then you're going to see movement lower again, you're going to see movement higher. And that right there, that pattern that will develop, just like it developed here, just like it developed here, just like it's developing in this pattern, that is exactly why we focus on the 3 9-minute Abel trend charts, because those signals are going to give you an opportunity to take a rising bias or a declining bias trade regardless of where the trend is headed. And that's how we make money. A lot of people will only trade the trend. We're going to trade the trend as well as the counter trend, but it's all going to be based on good, solid, confirmed signals on Abel trend. And as I said, I personally use the 3 9-minute chart and the 5 15-minute chart. Take a quick look at RUT, see if it's consistent with the other indexes. It is. 2 days ago, we hit a new high on RUT, a new high for the past period that we've been measuring this channel. And yesterday we stalled right there, and today we've come down pretty hard off of it. So the lowest low, it looks like in the last 3, 6, 9, about 12 days, the lowest low is 1198. Today we traded down to 1202. So we're still a little bit above that, but you can see very clearly, just visually, that we had rising pattern of higher lows and higher highs, and now we've dropped below the lows of the last several days. I believe we've dropped below the lows, all the lows that we've hit since the 25th of July. So those are clues. They are not the full story. We won't see the full story until we have an opportunity to look back and see exactly when the next down cycle started. Guaranteed though, folks, there will be a down cycle. Every single time there's a down cycle, it's followed by an up cycle. Every single time there's an up cycle, there is a pattern of a down cycle movement that follows. Guaranteed. It's just a matter of where we stall, where we stop, and where that cycle begins. But some other clues, when you have indexes that are reaching or obtaining new all-time highs, so they're hitting new all-time highs or they're reaching historical highs, it's a natural stalling point. Doesn't guarantee that we're going to turn and head lower there, but it's something to keep in mind. You're hitting a stronger headwind. When you have oops patterns that form on the indexes, much like we do on NDX, the lowest oops pattern we have to satisfy would take NDX back down to 42.91.43. That's pretty significant. So when you have stalling at levels of resistance, when you have multi-year highs that we are either close to or moving above, those are all stalling points, and then combined with oops patterns and weakness on the AO. Let me take a look at what the NDX AO is. We don't have weakness on the daily AO yet. It's kind of flattened out the last 2 days. Wouldn't be surprised if in the next couple days we start to see our first red bar print here. But if you start working your way back into the intraday time periods, you're going to start to see that that pattern intraday is starting to develop. You see how intraday today momentum stepped off significantly. So, and that's been a pattern that's been declining ever since back here at the beginning of July. Weaker and weaker momentum. Even when we spiked higher, each time we spiked higher, it was lower than the more significant previous peak. So that's a whole pattern of weak momentum that we're seeing. So here's the summary for today, folks. We're starting to see some potential evidence of weakness in the indexes. We can see it on the able trend, longer term, and intermediate term timeframes. We're starting to see some potential weakness in the bar chart patterns coming down to support. Don't know if it's going to break below that or bounce back higher, but we're definitely seeing weakness as evidenced by stalling out at a line of support. Each of the three indexes are handling that pattern a little bit differently. So why is it important to understand that? Why would it be important to know that there's weakness? It's because you want to proceed cautiously when you see a 3 to 9 minute signal to go long. It doesn't mean you want to stay away from it. I'm not asking you to be afraid of that signal. I'm just suggesting that you may want to be conservative and make sure that you fully confirm that signal before you jump in. If you see a signal go short and you see a lot of indicators leading you to believe that we've got a greater degree of weakness forming, then you may want to you may want to jump into that short position by buying a put or opening a call credit spread and take advantage of that. And you might choose to be slightly more aggressive on that entry. So that's what I see. I want to share one last thing here with you. We're going to take a look at Priceline. Here's an interesting management decision that we have to make. We have a position in play on Priceline right now that is a diagonal spread. And that diagonal spread has the long leg expiration out in October, but the short leg expires this week. Now, this position's been playing out very, very well for us. The short leg is a 12.30 strike, so about 100 points out of the money. And you would normally say, wow, that we can just let that short leg go to expiration because it's 100 points out of the money, and geez, even if we move down 100 points, you're still going to have time value decay on that short. Here's the rub on that. Priceline's going to announce earnings after close on the 4th. That means they're going to announce earnings after close on Thursday. The option that I'm talking about will cease trading and expire on Friday at the close. I more than likely am going to buy to close my short and take it out of play for earnings. And the reason I would do that is because look at how much Priceline has been known to move in the past. Go back here and you can see here that we had a close on the 6th of November of 1449.90, and we had a low the next day of 1303. So 14, let's see here, I'm sorry, I was on the wrong bar. 1449.90 to a low the next day of 1303. That's 146 points. That was a 146 point move. It happened to correspond to an um, earnings play. So what would happen if I let that ride? Well, first of all, by the time we get to tomorrow, or even if I wait until Thursday, because earnings announcement is after close of the market on Thursday, if I get to tomorrow or Thursday, the premium on that is going to be so small that I'm going to have a very nice profit. So why wouldn't I take my profit and take it off the table? If I leave it in play so that I don't have to pay commissions, or I don't want to give up the, I don't know, $3, $4, or $5 of premium that I'm going to buy back, what if Priceline drops 150 points? Well, you would think on the surface that that's all going to work just fine, because you're going to have the delta value increasing the value of the long leg, and you've still got time value decay in the short. But here's what happens on diagonals and calendars that you have to be very cautious about. Um, Once the short leg is in the money and you're right at expiration, there's really no time value left, but it's accumulating dollar for dollar intrinsic value. So if I found my short leg 50 points in the money, I could almost guarantee you that my position is going to be lopsided, because my long leg is out in October and it's only going to be gaining at delta. So all of a sudden I would have a position with a short leg expiring in the money that I would have to take off probably for a loss, because there's nothing else I could really do with that position since the short is in the money. So sometime between now and close of the market on Thursday, could be today, might wait until tomorrow, might wait as long as Thursday morning. We'll see, but I'll probably be buying to close the short leg of my position. I don't mind letting the long leg run, leaving it open, even if Priceline has an earnings announcement that shoots the stock way up. And the reason for that is because I don't have a huge number of contracts and it's an October expiration. So if I don't hold the short and the price of Priceline moves up dramatically, I'm going to just add more contracts, cost to average that position. And if it did move up significantly, you can already see that it very likely could be a Bollinger Band snap, which would be a downward bias play. So anyway, those are just kind of some general thoughts I have on my Priceline play for this week. I know some of you in the live trading room have just put comments out there. Hey, Priceline announces on August 4th. Yes, they do. And I just wanted to share with you um, how I may play that. I don't think it's wise, especially with an earnings play, to carry the short leg, even though I'm 100 points out of the money on a stock that has proven before its capacity to have some pretty significant movements. Let's take it out of an earnings play and just go back here and look at the close on the 23rd of June. 23rd of June, the close was 1390, and the next day, the low was 1217. That's a pretty significant move. I'm going to take my short off. Here's the best case scenario. I take my short off, I'll have a significant profit. If they have a big move on earnings and it pushes the stock significantly lower, then I'll probably have a nice profit on my long leg. If not, I'll manage the long leg by cost averaging it. If it goes up instead, if instead it's just flat, then I'll just immediately on Friday turn around and sell to open a new put against that. So that's my plan on Priceline. All of those different scenarios are what I consider to be opportunities. They're not challenges, they're not risks, they're not a problem. They're all just opportunities for us. So I hope that's helpful to you. I don't normally get that much detailed. I don't normally get into that much detail on position management and the thought process around positions during the mid-market summary. It's usually intended just to be kind of an overview of where are we from a global perspective, where are we from a short-term perspective. But there are enough people who followed along with that Priceline trade that I just wanted you to understand what the thought process is. And if you're not in the live trading room and you're listening to this, just understand that we teach those things in our training programs. In fact, we have a new training program that we're releasing at the end of this week called the Profit Maker. And what I just described is part of what we will be teaching in the new Profit Maker program, where we're talking about calendar spreads, we're talking about diagonal spreads, we're talking about market tamers, we're talking about how to transition from one type of spread to another spread. And basically our objective is to teach you as traders how to understand the complete flexibility you have by trading options. And when you understand multiple different types of spread strategies and you recognize how they can interrelate to one another, it just expands your ability to trade and improves your confidence level. And when your confidence level is higher, your profits are generally higher. So thanks for being here, everyone. Those of you who are listening in on the live trading room, thanks for spending some time checking us out. If you're a subscriber, thanks for being here and being part of our community. Um, Appreciate having you. So thanks, Michael, for doing a great job of hosting our room.
No problem, Mark. My pleasure.